The balance sheet of A company discloses the financial position as on 31st December 2005. He gave share capital, reserves, and surplus. Then non-current liabilities, nothing are there. Current liabilities, trade payable, short-term provisions are there. Fine. Then on the asset side, he gave tangible assets. That means obviously fixed assets, I think. Intangible goodwill. And whenever in this valuation of share, if he is giving goodwill, for us it's not necessary. Goodwill and investments, both. Next, inventories, he gave trade receivables, cash equivalents. Now, when we go to the detailed description, he says share capital, reserves and surplus, fine, they are given. Trade payables, provision for taxation. So these are only two outside liabilities he gave. Tangible assets, he gave land and building, plant and machinery. And trade receivables, he gave provisions. For us, that provisions we are not going to take. Directly, we are going to take net amount. If we have to take provisions, then book debts we have to show 1,03,000. Provisions we have to show in the 3,000 in the liability side. So that's why I don't want to make you confused. So we'll go with what is given in that one. You are asked to value the goodwill of the company for which the following information is given, he said. Reasonable return on average capital invested in the class of business done by the company is 12%. Adequate provision has been made in accounts of income tax and a depreciation. The rate of tax may be at a 50%. The average rate of dividend declared by the company for the past 5 years is 15,000 he gave. So here he is trying to show us that how much is the percentage. So how much is the percentage he is trying to tell us. So here he gave one is the one ma the reasonable return on average capital invested in this type of business it seems, which is 12%. Whereas one more thing he is giving, that is the average rate of dividend declared by the company is 15%, he said. So among these two things, which one we are going to take is, now here we are talking about a normal rate, a reasonable return in this kind of a business. So that's why for me, the reasonable return which is usually followed in this kind of a business, that is important. Means the first point percentage is important. What is company giving, for me it's not important, it becomes a personal income of the company. But what is the general rate, which is we are doing a normal profit, so normal rate which is prevailing in the market is important for me. That's why I'll go with the 12% rather than 15%. So here, one more point, what is that I wanted to tell is here, actually he didn't give current year profit, but he is saying that there is a rate of tax taken is 50%. So when he is giving like that, means somewhere he is indicating you are going to find out where is the current year profit. So that is what here it is. So directly he has not mentioned, but indirectly he is telling us that taxation rate is 50%. So what I'm going to do is I'll check in the liability side. Do I have any kind of provision which is of related to the tax? So here he said taxation is 55,000. That means if 50% of tax is 55,000, then balance of tax, balance amount is again 55,000 only, no? So that means he is indicating that the current year profit is 55,000. So that is what he is trying to tell us. So that's what we are going to do it. Now, as of now, first we are going to find out what, as it is capital employed. Capital employed as it is asset side approach. Now here first I'm going to take all the assets. So first all the assets, in that one we have what, land and buildings. So here he has not given me any revaluated amount, so that's why I'm going to go with taking what it is present in the textbook. So 1,65,000 is that one. Then plant and machinery, which is 1 lakh. Then in the current assets, he gave us, what are the three things he gave? Current assets, inventory. Inventories means what? Stock. So inventories he gave around 1,10,000. Then trade receivables. So trade receivables he gave is how much? 1 lakh. Then he gave cash. So cash, how much he gave to us? 5,000. Now we are going to add all these things. So how much it will be? 1,65,000, 2,65,000, 3,75,000, 4,75,000.
4 lakhs, madam.
4,80,000.
4,80,000.
So total of assets is equal to 4,80,000. Okay, from this one, what we are going to do? We are going to minus outside liabilities. So outside liabilities, he gave only two things. So outside liability, we have one is, what is that first one? We have sundry creditors. So sundry creditors, which is, how much he gave sundry creditor? 69,000, no? Yeah, 69,000 he gave. So 69,000. Then he gave provision for tax. So which is again 55,000. So when we total it, it will be how much? 944 plus this one. 1,24,000.
12,000.
1,24,000.
Yes, ma'am.
Now from this one, when we minus 4,80,000 lo nunchi manam 1,24,000 తీసిస్తే ఎంత నాన్న? So this will be our capital employed.
3,56,000.
3,56,000. So this is our amount which we has got it. Now here I'm taking away. Let me draw the lines first. So this is total of assets. Then this is total of liabilities. And this is the capital employed. Now we got this one. But just now, what did I studied here? He said he gave tax. So when he is giving tax percentage, I said something hidden adjustment manaku unnatte. So what I'm going to do as because, so I'm going to write a note and then I'm going to do this thing. So what he said, the current year profit is not mentioned, nor last year profits given, but in the adjustment he gave hint mentioning that tax rate is 50%. That means the tax which appeared in the liability side is 50% of profit. Therefore, the balance 50% is our current year ప్రాఫిట్. అంతే కదా తీసుకోవాలి. సో టాక్స్ ఎంత ఉండింది అప్పుడు మనకి ప్రాఫిట్ కూడా అంతే కదా ఉండేది నాన్న. సో టాక్స్ మనకి ఎంత ఉండింది 55%. సో ఆబ్వియస్లీ కరెంట్ ఇయర్ ప్రాఫిట్ కూడా ఎంత ఉన్నట్టు అర్థం అప్పుడు ఆఫ్టర్ టాక్స్ 55,000. సో మనకి కరెంట్ ఇయర్ ప్రాఫిట్ ఇస్తే ఏ రూల్ అప్లై చేస్తాను అని చెప్పాను నాన్న. వీఆర్ గోయింగ్ టు గో విత్ వాట్? ఓన్లీ క్యాపిటల్ ఎంప్లాయిడా, యావరేజ్ క్యాపిటల్ ఎంప్లాయిడా? వీ హ్యావ్ టు గో విత్ average capital employed. So here as current year profit is given, so we should find out normal profit on average capital employed. So here average capital employed is equal to capital employed minus half of current year profit. So average capital employed, how much we got it? Average capital employed we got capital employed we got is 3,56,000 minus half of current year profit ఎంత అనుకున్నాము 55,000. సో చూడండి ఎంత అప్పుడు 3,56,000 minus 27,500 అంతేనా? ఒకసారి కౌంట్ చేయండి. 55 divided by 2. 55 divided by 2. Yeah, 27,500 only. So 27,500 minus 3,56,000 cheste, I'm getting 3,28,500. Did you get it? Same?
Yes, ma'am.
So here it is 3,28,500. 3,28,500. Where is it? So now here I'll go with normal profit. Normal profit is equal to average capital employed into normal rate. Now here what did I said ma? Here just now I said manaki in general market lo what is the rate prevailing, that is important. Company ఎంత ఇస్తుంది నాకు సంబంధం లేదు. So that's why here he gave two ratios. So when he gave two ratios, which ratio I will take ani ante, now the average rate of dividend declared by the company for the past 5 years 15%. Company declare చేసింది నాకేం సంబంధం? నార్మల్ గా వాట్ ఈస్ ద రేట్ ప్రివేలింగ్ అనేది నాకు ఇంపార్టెంట్ కదా. సో దట్ ఈస్ ద రీజన్ the reasonable return on average capital invested in the class of business done by the company, అంటే ఇలాంటి కైండ్ ఆఫ్ బిజినెస్ చేసే ప్రతి కంపెనీకి రేట్ ఆఫ్ డివిడెంట్ వచ్చేసి ఇట్ ఈస్ this much 12% అన్నాడు. So that I am going to take here. So 12% you are going to calculate. So just calculate 12%, how much it will be?
39,420.
How much Ray?
39.
12% divided by 100. So is equal to
39,420.
39,420. Okay. That's it. So normal profit we have got it. Now next to what we are going to do it, we are going to go for the FMP, and FMP is easy here because we don't have much adjustments here. So already we have got the profit. Just I'm going to see did he give any kind of a thing. So as of now, remuneration any kind of expenses nothing he has mentioned. So simply we are going to go with this thing, that is calculation of FMP, that is future maintainable fit. So this is done. Now here the current year profit given is after tax. How much? 55,000. And there are no adjustments. So that's why here I'm going to go with taking as direct 55,000 as a amount. How much? For 4 zeros I have made it. So that's it. So what I'm going to do now, this is my profit because we don't have any other thing. So this will be become my FMP. This becomes my FMP because as I don't have any adjustment, so this is my FMP. Now here calculation of goodwill. So calculation of goodwill is equal to super profits into number of years of purchase. Now first we have to know what is the super profits now. So super profits is equal to FMP minus NP. Now FMP how much we got? 55,000 minus NP how much we got? 39,420. So how much it will be? Just see. 55,000 minus 39,420. So I got 15,580. Correct? Now simply goodwill is equal to so 15,580 into how many years of purchase is it? 3 years of purchase. So 3 years of purchase. So calculate how much it will be now into 3. Goodwill is equal to 46,740. Got it the same?
Yes, ma'am.
That's it. Okay. Just take down this one. I will do one more last problem. In this one, this will be the last problem. So capitalized method. It is very easy. Usually you'll get for short only. Either if it is yes also, it's very easy. Until here, the process is same. Until here, the process is same. Just in the calculation of goodwill for the this one, it is going to change a little bit. So that we have to know about it. So just take down fast. Shall I just take down the screenshots? Shall I clear it?
Yes, ma'am.
Okay, okay, then I'm just closing it. 1, 2, 3, done. Yeah. Now, before we go for this one, let me tell you what is mean by capitalized method. So this is one more method of calculating the goodwill. So here, calculation of goodwill in capitalization method. So what is the formula for this one is just goodwill is equal to super profits divided by normal rate into 100. So that's it, Nana. So usually until the super profits, it is the same. Previously, what we used to do, super profits into number of years of purchase. So here he will not give number of years of purchase. So what we are going to do, whatever it is available. So here super profits divided by normal rate into 100. So directly, if number of years of purchase is not given, whatever the available information is there, using that we will calculate the goodwill anamata. So that is what here this is all about. So this is goodwill. Now the sum will be as it is. So just I'm reading out. Listen, a company desirous of selling its business, desirous of selling its business to another company has earned an, so company is trying to sell its business to some other company has earned an average profit of 1,60,000 per annum in the past. So whatever the information here he is dealing, because they are actually selling away the company, so whatever the information is been provided here, it is about the past. So he just wants to tell this might occur in future or may not occur in future. So what we are going to do, average profit they used to earn is 1,60,000 average profit. He gave directly average profit. It is considered that such average profit fairly represents a profit like a to be earned in the future, except means the exceptional cases. Director fees of 15,000 charged against such profits will not be payable by the purchasing company, whose existing board can easily cope up with the additional administrative work at a present fee payable to the directors. Next, rent at 25,000 per annum, which used to be paid by the vendor company, will not be charged in the future, since the purchasing company owns its premises and can supply the accommodation necessary for the staff and equipment of the vendor company. So the value of the net tangible assets of the vendor company at a proposed date of the sale was 18 lakhs, and was considered that reasonable return on capital invested in the past in ordinary was 10%. Calculate the value of goodwill by capitalization of expected future net profits. So this is capitalized method. So capitalized method, it is easy only, very easy actually. So here we need not go for calculating anything. That fellow has given everything. What he gave, he only gave net assets. Net assets are nothing but net assets, or we call it as capital employed. So how much he gave capital employed? He said 18 lakhs. And normal rate he only gave in this kind of a business, it seems 10%. That's it. So when he gave capital employed and when he gave a normal rate, what we are going to do? Directly we'll go with normal profit is equal to, as here he didn't give us the current year profit. What he gave? Average profit. When we are going to calculate average capital employed, when he gives very particularly about current year profit, but here he has not given. So whatever capital employed is there, directly on that I will calculate normal profit. So capital employed into normal rate. So therefore capital employed is 18 lakhs into 10 divided by 100. 10% he said no, so that's why 10 divided by 100. So how much it will be now? This will be 1,80,000. 1,80,000, 4 zeros. Yeah, done. Now this is it. This is the first thing we have got it. So once we have got it, the answer. Now we'll move on with what? Calculation of FMP. Because super profits, if I need it, definitely I need what? The FMP also. So that's why as we divide here again, I'll go with calculating the FMP. So calculation of FMP. So here what he gave? Average profit. So average profit he gave us something 1,60,000. Then what he said? add director fee. So director fees which we used to pay previously, it seems which we used to pay previously. It was previous expenses, but now it will not be expenses, it seems. That means it will be benefit for me, no? So will not incur in future. Will not incur in future. So the expenses which used to be paid earlier, now it will not be incurred, it seems. So that means it is a benefit for me, isn't it? So that's why that 15,000 I will add back. So when I'm going to add these kind of things, obviously it is going to add me benefit, no? That is the reason we will add this one. And then he said rent previously we used to pay, it seems. Rent we used to pay previously because we used to be in the rented. But now what he is saying, will not be paid as they own premises. So they have a premises system. So that's why they will not pay the rent. So now these expenses is also saved for me. So how much it is now? 25,000. So this is the way I have saved this much of amount. So total when I'm going to save it, obviously my profit is going to increase or not. So that's why now I'm going to add. How much it will be? So therefore FMP is equal to, how much is FMP? Just add and tell me. 1 lakh 60 plus 15, 1 lakh 75. 1 lakh 75 plus 25. 25. 2 lakhs, isn't it? So directly I'm taking 2 lakhs. Now I got this one. So let me draw the lines first. So this is, now I got my FMP now, and I have got my normal profit. So therefore we are going to go for calculating the goodwill. So calculation of goodwill. Now here which method we are following? Capitalized method. So capitalized method, what is that here it is going to be? So here what I'll do, better I'll write in the brackets. Capitalized method. So how the formula is going to be? Capitalized method means it will be super profits I'll write like this, super profits divided by normal rate. A normal rate, then into into 100. Okay, so this is what here it is going to be. Ready? Okay, fine. So this is what normal rate into 100. Okay, now this is the formula, Nana. So simply what you do, just apply this one. We have already got super profits. So when we got a super profit, simply we have to go for applying it. So how we are going to do it? Simply you're going to apply it. So super profits is equal to how much we got? Therefore, super profits are how much? We didn't find out, no? Okay, fine. We didn't find super profits are how much. So super profits is equal to FMP minus NP. So until here it will be same, I said. So FMP, how much we got? 2 lakhs. 2 lakhs I have written, or 20 lakhs? 1, 2, 3. Okay, one more zero extra I have written. and 1,80,000. So it will be how much, ma? It will be 20,000. Now apply in the formula. 2 lakhs rasana 20,000 badalu. So goodwill is equal to 20,000 divided by 10 into 100. So how much it will be? 1 0 will be added extra. So goodwill is equal to 2 lakhs. అంతేనా? క్యాలిక్యులేట్ చేస్తే వచ్చిందా? ఒకసారి అటెండెన్స్ తీసుకొని ఇస్తా.
Yes, ma'am. 2 lakhs.
సో క్యాపిటలైజ్డ్ మెథడ్ చాలా ఈజీగా ఉంది కదా. కానీ
Okay.
ఏంటి ఎలా ఇచ్చినా ఓకే. ద ఓన్లీ థింగ్ యూ షుడ్ బి లైక్ either the way, either the method is fine with